how many times do you know real estate investors open up their QuickBooks and say, where am I right now? Like I want to look at my numbers. Like no one does that. If you're the entrepreneur, you don't do that. That's just not something that people do unless they've got a background in finance and they know how important it is and they have gone through training. Most people though don't, and that's okay. This gives them the power, just like you said, open up your phone, look at where your cash balances are. Boom. I know exactly where I am. I've got money to pay my expenses this month. I've got money for my profitability. I've got money to pay myself. And look, the tax account keeps growing. So that way I don't have to worry about that at the end of the year.
All right, guys, here we go now. It is time to unlock more doors to deals. We're real estate investors here. We're real estate agents here, and we all have one thing in common. We believe that we can. We can live the life of our purpose. We can create financial freedom. We can build a better life for those that we love, and we can live the life of our dreams. I don't care if you're trying to do your first deal or your 500th this year. You can get to the next level, and we're here to help. All right, guys. So welcome to doorstodeals.com/067. I'm your host and founder, Jim Manning. And today I'm really excited to bring you this quality episode. So David Richter is on the line, and he runs some fractional CFO services, and he wrote a book called Profit First for Real Estate Investors. And this topic is near and dear to my heart because I did it the wrong way, quite frankly. When Ryan and I were scaling our business and we got up to several hundred deals a year, there was a point when we started scaling broke. And even though we did an extra couple hundred deals in the year, we actually made less money than the years when we were running a smaller operation and not doing as many deals. So this topic, when we talk about profit first, and we talk about net profit, and we talk about holding on to as much as you possibly can of your revenue, is incredibly important. It's time well spent and an investment in yourself and your future, because guys, at the end of the day, it doesn't matter how much money we generate. What matters is how much money we end up holding on to and keeping. So I'm excited to bring this episode to you today. And it is an incredibly important topic. So one that I'm really passionate about. Okay, so before we get rolling, a couple public service announcements, okay? If you are looking for passive income opportunities, here at Three Doors, our team, we actually helped people generate over $130,000 a month this past year. And our main goal is to help 250 people become financially free, whether that's our agents on our team or our agents' clients. Okay. So if you have the interest in some passive income opportunities, send us over an email to deals@threedoors.com, and we can kind of set you up and get the ball rolling. If you're a wholesaler looking to sell some deals, same email address, deals@threedoors.com. Send us over an email and we can take a look at it and see if we can put together a deal. So last thing is let's get into an iTunes review of the week.
This week's review comes to us from Ryan Wessels, titled Storyteller, 5 stars. Ryan writes, Jim does a wonderful job of asking questions. These questions dig in and help discover insights on stories that help others with all things real estate related. Ryan, thank you for your review. Jim, back to you.
All right, guys. My talk's over. Let's get going on that interview. Okay, what's up, guys? Got Caleb and Jim here, and today we have David. Oh my goodness, David Richter. How do you say your last name?
Richter, yes, sir.
Richter. All right. So today we have David Richter on the line, and he has written a book called Profit First for Real Estate Investing. And the biggest thing that I would say, guys, about when it comes to finances. I was in denial about the importance of them earlier in my career. And, I would just do the taxes at the last minute possible. And I didn't want to do it. I wanted to vomit every time I thought about it. And then Ryan and I started doing hundreds of deals a year, and our expenses rose faster than the profit rose. So even though we were doing and generating millions of dollars of revenue a year. We had a year that we, in essence, broke even. And we worked our tails off. Our team members all wanted to kill us because we were doing so many deals on our ops team. And then we looked at it, and at the end of the day, we didn't have any profit. And so this is something that is near and dear to my heart, because I know how painful it is when you're running a business and not keeping the profit in mind. So this topic is incredibly important. And we have a subject matter expert here on the line, and David, to talk to us about this. So David, welcome. And why don't you tell us a little bit about yourself?
Sure. No, thanks for having me. I'm really excited to share share this message. So I started in real estate. I read Rich Dad Poor Dad in college. So I actually my background is real estate investing. I'm not a CPA. I don't have the degrees or whatnot, which usually throws people off of like, why do you own a fractional CFO service then? Well, I'll get to that. But I started reading Rich Dad Poor Dad, read a bunch of other books, did my first deal. I bought a house off the MLS. It was a HUD property, and fixed it up and then rented it. So cash flowed for a little bit. Then I actually lived in it for several years, 2 years. Then I lease optioned the property from there. The tenant, I had super tenant. He paid early on time and then cashed me out 6 months later with a loan. I'm like, what the heck? So because I wanted the cash flow, but he cashed me out, big lump sum. I took it tax free because I had lived in the property for 2 years, and there's, tax laws around that. So I actually got it, no capital gains tax. And I said, I got to do more of this. So I hooked up with a company that was doing about 5 to 6 deals a month between wholesaling. Really, that's what they were mainly focused on. And we took that company over the next 5 years from 5 deals a month to about 25 or 30 deals a month. And I got to sit in every seat too: acquisitions, dispositions, project management, property management, the finance seat, like all those different seats. So I got this huge hands-on education of doing that. So I was doing deals on the side too. I was actually buying some of the houses from the company, turning them into like a little rental portfolio. I was loving real estate. But one of the seats I sat in near the end of my tenure there was the finance seat. I sat in there and I got to see, now from acquisitions all the way to selling the property or renting it, how the money flowed, what was really going on with the money. And it was super interesting to me going and diving into that, because I saw, like you said, James, that even though we were doing 25 or 30 deals a month, and making millions of dollars a month, we were spending just as much as that or more, because now we had 25 or 30 employees. It was the exact same situation as you just described. I'm like, oh man, things need to change, and change they did. I mean, basically had to scale way down. I, at that time, also said, we can live anywhere at this point because of what we had been doing. So we moved across the country. I moved to another real estate investor that I was working with in Virginia. So I stopped from that other company, went to this other one. And I said, the first thing was, I got to see the finances, open the books. Like, I want to get in there. So we did. And like, things were a mess. Didn't even have the numbers, didn't know where he was. So like, we got that all straightened out. And then we realized he was super under leveraged on his portfolio. He had a small portfolio of properties, and he had poured a ton of his own money into it and not gotten enough private money on it, or, bank money or anything. And so he was like at 30%. Like loan to value ratio. And so he's like, I'm comfortable going up to 60, 70%. So he was able to pull out hundreds of thousands of dollars of his own money. And after that meeting where we went through that, he said, this has transformed my life. Like, I can now do whatever I want with this money, but, buy another house, buy another rental, sit on the cash if I want to just take my options here. So I was like, oh man, this is it. I need to help people just realize the power of knowing those numbers and then being in a great cash position and managing the cash. So that's kind of my journey from real estate investor to now that started my company, Simple CFO, to help people on the financial side of their business really have cash flow and profitability. That's how I got to meet Mike and a lot of other things. I could go down a bunch of different stories from there, but at least want to give a high level overview of my real estate investing career.
Absolutely. And one thing that before you're a business owner, I don't think you realize is that a company can be making millions of dollars a year and be completely broke and cash poor.
That is so true.
Yeah, absolutely. So Caleb, What's going on in that mad genius head of yours? Well,
I'm just thinking here, like, I'm wondering more about how your company operates. So if someone calls you today and they're like, "Hey, I want you to come and look at my business," tell us some of the stuff you do that look like.
Sure. The very first thing we do is assess their business from the financial aspect. One, do you know your numbers and are you managing from data? Do you have, number two, is your proper team in place? Do you have the right bookkeeper in place? Do you have a CPA who talks to you, not down to you or above you? Do you have someone that's actually helping you on the tax side save save that money? So we're doing an assessment first of your business. Then on a monthly basis, then we're diving into profit first and setting up a cash flow management system for them, for the owners. Our big thing is we want you to get to 40%, taking home 40% more within 90 days. Like, we want you as the owner to be able to pay yourself that much more within 90 days. Then several quarters down the road, we want it to 2 and 3 times what you're taking home now. Like, that's one of our goals in our business, tangible goals, that we want you to make more net profitability, but also being okay with paying yourselves and being a business owner that's benefiting from the business. So those are the types of things we go in, we do the assessment, we make sure you have the right numbers, we make sure that you have a cash flow management system. Then on the back end too, there's a third pillar that we do is, well, are you setting up something to create wealth? If you're fixing and flipping and wholesaling, are you buying rentals? Or are you doing a strategy like the infinite banking strategy? Or do you do, are you doing self-directed IRAs and something for the long term? Like, do you have something like that? Because you can generate a lot of cash and you can do a lot of those things, but it's about keeping it, and it's about what are you doing to actually build your net worth and the wealth that you have.
Okay, so you blew my mind a little bit by a statement. Let's dig into this a little bit more. So taking home 40% more within 90 days, and I'm assuming the company is still making the same level of profit. Like in 90 days, you're not like dramatically, now all of a sudden their net profits are up 40% within 90 days. So walk me through that structure or how that even works.
So what we do, first of all, is even from when I have a first conversation with the owner to see if we're a good fit, one of my first questions is, are you paying yourself anything right now? Because we've had calls, just James, like what you said, that these people making millions of dollars and they're not even paying themselves anything, like barely just enough to get by and scraping. So it's first, are you paying yourself is the first question. Second, what are you paying yourself? Is it enough? And do you need to increase it, or are you okay? So like, we're discovering that right up front, if that is something that would benefit them right now, if that's their biggest need. Then the second thing, once we establish like, yes, they would like to be taking 40% home more or whatnot, then we focus on, we have specific meetings. We call them owners, benefit, and compensation meetings. What are you getting right now from the business? What is it providing you? And here are some of the steps we're going to take right away for you to be able to take more home. We need to know what you're making. We need to now set up, like the Profit First system, set up an account to pay yourself. We need to see what deals are coming through, like what is your deal flow? What is your actual cash coming into the account? What are the expenses that you have? Are any not contributing to your bottom line? Like, are those ones that you're just like, because I don't look at this, that's not contributing? So we're going through making sure that not only are we maximizing our gross revenue, like from properties, but we're also minimizing any expenses. And then we're also going in and setting up and saying, okay, you want to pay yourself this? If this is where you need to be, then we have to get you to this number as fast as possible, because right now it's almost like you're building in self-scarcity. Even though you might say, I have the abundance mentality, I give a lot away. But if you're stressed about your finances at all, you will not be performing to your maximum ability. So we set up that account and we're driving towards, okay, can we get you here as fast as humanly possible within these 90 days to where you at least are taking what you not only need, but can feel comfortable with as the business owner, not having to feel that stress. So it's a lot of those types of conversations, which leads me to a lot of people, when they think of the financial side of their business, this is just in general, a bookkeeper, CPA, they're thinking it's very transactional. With a CFO, a fractional CFO, we're very relational. We have to be talking. We have to be talking about what you're doing, and it's really digging in to see where you are currently and how fast we can get you to where you need to be.
Where do you think is like area that most people are suffering and what they need to do differently?
Number one, it is being able to actually know their numbers. That's probably because there's a couple different reasons, and it's not always the owner's fault. It's sometimes they don't have the right people in place, or they have people that aren't truly helping them realize the power of the potential of knowing those. Because first of all, most people that come to us, they are like, they don't know the numbers. They don't care about it. I'm a deal maker. Like, I don't even want to talk about this. But we realize once people say, you know what, I don't know the numbers, they admit that they don't know what's going on. We dive in there and actually start putting those numbers together, even if it's bad. Even if we put together the numbers and it's negative profitability, or they're running negative on a monthly basis, they now have the power of saying we can move forward from here, because we obviously either need to increase our deal flow, the deal size, like our profitability per deal, or are we just spending way too much? Have we grown the business when we should have been focusing on getting better and not bigger? So that's where once you have those numbers, it gets really laser focused on how we can actually make the company better. But I would say that's the biggest mistake people make, and it's the biggest area for immediate improvement.
Interesting. No, it's so we talk about knowing your numbers a lot, so it's very interesting. That's the first thing you can say that most people struggle.
Yep. Yeah. So walk me through some of the concepts in your book. So profit, real estate investing. What are some of the structures that you're teaching it?
So profit first. I want to make sure, if people haven't read the original book by Mike Michalowicz, that's still a great book to read. If you're in real estate investing, now we have Profit First for real estate investing. But the overall general concept, the mindset of Profit First, is the formula that every accountant, CPA, bookkeeper has out there is sales minus expenses equals profit. Pretty simple formula. I make a sale, I sell that deal, I collect the money, I pay everyone else and their mother, and then whatever I have left over is the profitability that I have, and that's thinking of the profitability last. But Profit First says it's sales minus profit equals expenses, meaning I make a sale, I make sure that we're healthy, and I allocate and transfer my profit first. And then I live off what's the expenses that I have, that money that I have left over, in order to run the business. So that's the basic framework of the high level, the mindset. That's the same stuff that you'll hear from Robert Kiyosaki, from other people, like pay yourself first, and that mentality. It's the same exact concept there. It's making profit a habit inside of your business. But then how do you make it a habit? How do you actually live out that formula? That is what's inside of this book here, is the steps of how do you make profit a habit inside of your business. And number one, it's doing an assessment. Where am I right now? Where am I as far as percentages go in my business? If I'm making $100,000 a month, then how much am I spending in a month? And how much am I paying myself in a month? That's what I would look at very first. Okay, I'm making 100,000, we're spending 90, and I'm paying myself 5. Well, then that's 5% to you, 90% out the door. And where's that other 5% going? Maybe it's to rehabs and projects or whatever. But then you get percentages set up of, this is where I am right now. Then the second step is you need to make sure to set up physical bank accounts. Now, if you are watching this podcast, because we're recording it on Zoom and you can see me, you could probably tell that I like, Harry Potter and Star Wars and stuff. I'm a nerd, I'm a typical person. I like movies. I like the big epic sagas. And in those specific franchises, there's 3 main heroes, always driving the story forward for good. And we say in your business, instead of just having the operational expense, or that emperor, or, the Voldemort, or whatever of your business, that operational expense account, everything goes in there and you pay expenses. You need 3 bank accounts to fight the battle and for you. And that is profit account, an owner's compensation account, and an owner's income tax account. Those 3 accounts are specifically for the benefit of the owner. It's taking it from where I collect money into this one big pot and then pay it out of this one big pot, and you're just always thinking about the expenses that you're paying out. You have specific accounts that are profit is for the risk that you take of starting the business, for your time investment and what you do for that business. That's the profit account. Your owner's compensation is for you if you are working in the business. That's where you save that money in order to pay yourself from the business. So that might be a W-2 or distributions, however you do that. Then owner income tax. This is one of the ones that even just last week, one of our CFOs had a meeting with one of our clients and said, I had enough to save for my taxes this year, and I have already saved enough, to pay it off, like the whole bill, because of this process. So that account is specifically to pay the owner's income tax at the end of the year or quarterly, whenever those payments are made. Because how many real estate investors or owners do you know that say, run around like a chicken when their head is cut off when it's tax time, and saying, I need to do 3 more deals just to cover this, or I need the payment plan, or I need to push stuff back because I don't have the money, or I need to go get it. So set up those 3 bank accounts: profit, owner's comp, owner's income, and you already have your operational expense account. So that's 4. Then the 5th one is income. That bank account, call it income. That is literally just for deposits to go into until you allocate it out to those other accounts by percentages. That's the 3rd step: allocating and transferring the money from your income holding bucket into those other accounts, those owner benefit accounts and the operational expense account, because now you're getting into the habit of saying, I need this money to make sure I'm healthy as an owner and our business is healthy overall. And then this is the money that goes into the operational expenses to make sure we can pay the monthly expenses of the business. So that is the framework that we teach inside of this book. I also have some cool chapters in there of like how to mess up profit first for real estate investing, and how to use it for attracting private lenders, and how to use it for actual better deals of making sure the margins on your deals are getting better and like the actual average profit too. So some of those are inside the book, but the basic framework is assess where you are currently, get some bank accounts set up, and then for your profitability. And then number 3, transfer that money into those. And I tell people, because the biggest feedback I get from this is like, 5 bank accounts, are you nuts? And I'm like, well, if you can just set up 1 bank account, call it profit, and transfer 1% of your income, start doing something. Make profit a habit. That's what I'm going to hit on this podcast and every podcast is do 1 bank account, call it profit, transfer 1%. If you're not going to go the whole shebang, at least start getting in the habit of having a separate account just for your profitability.
Okay. And yeah, so are you nuts? Like, this was going to be the question I was getting ready to ask you. So, all right, so 5 accounts: an income account, a profit account, an owner's
compensation,
an owner's compensation account, then your operating expenses account.
And then the owner's income tax, saving for taxes throughout the year.
Okay. And what is obviously the negatives are just having 5 accounts and having to keep track of them, right? But what are, like, from your perspective, having the 5 accounts, like what's some of the best benefits to doing it this way? Hey guys, for those of you that are local to St. Louis, I wanted to make sure you knew about an amazing resource that we have to help do some extra deals. You can email our team at deals@3doors.com. And just so you know, we do deals with other investors all the time. Like, it's been hundreds and hundreds over the years, and we've averaged over 100 deals with other investors per year for over the last 5 years. We can straight up buy the deal if you have a wholesale under contract that you want to sell. If you need funding to finance a flip, or like you're doing a BRRRR strategy, we have funding available for you. If you're trying to wholesale a deal, we're doing JV wholesale deals with other wholesalers that, quite frankly, some of the deals we're putting together for a beginner or an intermediate investor, they'd probably be walking away from because we have systems and processes, and we have buyers in place that are paying top dollar for these properties. So make sure you use this resource. And the best way to get and the easiest way is to just send us an email, deals@3doors.com. All right, back to the episode. What are, like, from your perspective, having the 5 accounts, like what's some of the best benefits to doing it this way?
So this is one of the things that, as clients have stayed with us for years now, the best story I have is there was a guy who was very adverse to setting up those accounts at the beginning. He's like, 5 accounts, what the heck? Can't do, I don't want to set them up. And we were like, if you want to work with us, we're going to follow the system because we've seen it work time and time again. And so he was like, okay. He had 2 different entities. So he ended up setting up those foundational accounts, those 5 accounts for each entity. So he set up 10 accounts. And then a year later, he was on the phone with his CPA, and she called him and said, hey, this is what you owe for taxes this year, because he made profit and he was actually a profitable company. And he said, okay, let me look at my bank accounts, my tax accounts. And he said, give me that number again. So she told him, and he looks at the accounts. He had almost to the penny exactly what he needs saved. He's like, where do I send it this year? She's like, what? Like, usually it's a payment plan, or I got to push this off. And this was like January of the following year, of what the year that had just ended. She's like, what? So he sent the money over. He's like, now I don't have to worry about it for a whole nother year, and so that was a huge benefit. But the same guy here, he has his profit accounts. He took a 2-week vacation this year just from his profit accounts. It has also given him the clarity to say, do I want a lifestyle business or do I want to scale? Because now I'm building this profitability, and now I'm building this margin into my real estate investing company, this like safety net. And like, do I want to use it to just stay the size I am and just maximize profitability and go on these vacations and do the things that I want? Or do I want to invest in people and grow it and scale it? And at first, when we first started working 2 years ago, he was like, oh, I want to scale. I want to do these things. Now he's kind of taken the reins back a little bit and said, this is nice. Like, now I don't have to scale because I think that's where I need to be in order to have my business provide what I want. I'm already providing what I want right now. And so it's a true choice between lifestyle and scalability, because now he can scale from his actual profitability too. So those have been some of the things that we've seen as people set this up, because he also, the clincher was, he texted me just a few weeks ago. He's like, I'm never going back to less than these accounts again. Like, it's providing so much clarity of now, because the transfer happens just a couple times, like for most people, if you're doing a deal, let's just say you're doing a deal a day, I would say transfer once a week. Like if you're doing a deal a day, you probably have a team, you do those transfers once a week, but then you get to see in the profit account, the benefit is being able to open the bank account and see your profits going up and seeing true cash profit in these accounts, and not some nebulous number that some CPA says, oh, you made 100 grand this year. And then you look at your bank account, and you've got $5 in it. So this is another benefit, truly seeing the reward for the business as you're going through and doing those deals and saying, is it worth it?
So within this structure, if I'm hearing you correctly, is literally if the bookkeeper and if the money is flowing this way, you can literally just on your phone open up your checking account and know exactly where your company's at from what the balances are at.
From a cash perspective, which is what, as a business owner, what most people do anyway. How many times do real estate investors open up their QuickBooks and say, where am I right now? Like I want to look at my numbers. Like, no one does that. If you're the entrepreneur, you don't do that. That's just not something that people do unless they've got a background in finance and they know how important it is and they have gone through training. Most people, though, don't. And that's okay. This gives them the power, just like you said, open up your phone, look at where your cash balances are. Boom. I know exactly where I am. I've got money to pay my expenses this month. I've got money for my profitability. I've got money to pay myself. And look, the tax account keeps growing. So that way I don't have to worry about that at the end of the year.
So Elise is our team member that handles a lot of our financial stuff. And now I'm in my head contemplating, how do I tell Elise I want to open 20 bank accounts for the different entities and everything like that we have.
So we work with that a lot with the people we work with, because they usually have a good team member just like that on their team. And you're like, oh, shoot, I got to tell them. Number one, we're usually including people on these meetings with them to coach them of what it's going to actually do for the business. So that way they're on board from the beginning. But then we also say, once the bank accounts get set up, it's really not much on the back end. It takes you literally 5 seconds, you've got like a QuickBooks online system to mark the transfers as complete between accounts. So like, even though you're setting up these accounts, there's not a ton of inflow outflow like there is an operational expense account every single day, all the time. You're still paying for expenses out of that account. The difference is now you're making a one-time transfer like once a week or, once every other week, however often you're doing deals or collecting cash. Then once you do those transfers in the back-end system, it's literally just, okay, mark this as a transfer, move on. So we, help people know, like, on the back end, it's really does not add much to the bookkeeping part of the process.
Interesting. Yeah, that's fascinating. Caleb, have you ever heard of the Profit First before?
I was looking for it a second ago. So my coach just sent me, literally it's sitting on my desk right here. I don't know if this is the book you modeled after or not.
Correct. I partnered with Mike McCowitz there, and to get Profit First for real estate investing out the door.
Yeah, I got that in the middle of yesterday, so it's really nice. Crazy circumstance.
Yeah. So, David, talk to us a little bit just about you as a person. What's your family life like, or do you have a
Sure. Yep, I've got a wife and a 4-year-old daughter. I have been very intentional about building the business and making sure that I still have time for the priorities as well too. Every morning before I work, I dedicate about an hour to spending with my daughter. She's, like I said, she's 4 years old right now. She's going to go to school next year. So I'm trying to soak up every single minute that I have with her before she's gone throughout the day. So we play in the morning, like this morning, playing princess and parading her around and doing all that stuff. So I tried to build that in. And then I am intentional in the evening as well too, blocking out time, like not for phone or not for my computer, like making sure I have those built in. And then also, I follow basically what I call the Profit First life. It's like I set up on Sunday, like, okay, I want to make sure I'm intentional here. Is there any time here that I want to spend with my family during normal working hours, or like, is there anything I need to do? Or, I do Toastmasters and some extracurricular things, like building those things in, and then filling in work around that, and like being on podcasts and speaking and doing that type of stuff. So as far as a person, I want to be very intentional with my time. I know that I have a finite amount of time with my daughter, so I want to give that a lot to her. Got that, the time with my wife, making sure we set those times aside, and then making sure that this business, just like in Profit First and in this mentality, is serving the entrepreneur and the owner, myself, and not being a hindrance to what I really want to do. And I wanted that immensely. The other reason I started Simple CFO in my business is as an employee, and as W-2, I felt like there was those caps, I come from a religious background, a background of faith. So I like to give and, tithing, and that's a part of who I am as a person. And I was like, I can't give more than this amount every year if I'm not growing what I'm doing and the value I'm providing. So that's been another thing that's been near and dear to me. We support, because we follow Profit First, I literally have a bank account called Giving and Charity that a percentage goes in there from every single thing that comes in. And then we're supporting some people that, underprivileged going to college and supporting them, or some people that are on foreign countries and helping them, spread the gospel, things like that. So that's who I am as a person, just a little bit about me and what I like to do with my time, making sure that I'm very intentional about it and that the business is serving why I believe that I'm here on this earth.
That's amazing, dude. That is amazing. Yeah, I believe in tithing too, and we have like a auto draft on a couple of charities.
Awesome.
We believe in and are behind too. So as far as the fractional CFO goes, how many clients do you have right now, and are you taking on new clients? Tell me a little bit about that.
Yes, we have 8 CFOs on the team. We have about 35 clients that we're working with on a monthly basis now. And we are growing leaps and bounds because once we've gotten this message out that there's someone like us to help, that, we're not the bookkeeper, we're not the CPA, we're actually going to help you with financial business strategy and being a profitable company, we've just exploded. So we actually have this whole system of, certifying our CFOs, helping them so we can help more clients. Right now, we probably have room with the CFOs that we have available, about 20 clients, I would say, right at this time, with where we could take on that. Anything other than that, we'd probably be a little bit maxed out at our current capacity. But well, I've got a big dream here and mission that in the next 3 years, I want to have 100 CFOs on the team and servicing 400 clients, just because I know for each client that we're serving, it is transformational for their life and for their business. So that's kind of where we're headed as well, too.
What do you guys charge for these services?
So I love the way that we charge because we do percentage wise, just like Profit First. So what we want to make sure is that we are not dragging you down. You should be spending a certain percentage on the financial area of your business, like bookkeeper, CPA, CFO. So how we charge is usually on gross revenue, 1.5% to 6% per month of that gross revenue is what we're doing. And that's usually between 2,500 to $5,000 with the number of clients, with the size clients that we're working with. So you get a fractional CFO on the team. They're helping you, with the meetings, with implementing Profit First, getting that owner's pay up, making sure that you're doing those types of things. And that's how we charge. And that percentage is a range because it depends on number of entities, complexity, like if we like you or not, just kidding. That's how those percentages are determined.
Okay. And then how many do they are an active team member working, spending some time on your business?
So you don't get a full-time CFO for 250 or 150. So this is someone where we say we want to get you to, because the first onboarding, we're going to find stuff. We always do. It's either with a team member or with the numbers or not paying yourself enough. So like onboarding, there's going to be more time intense stuff like upfront, not a ton for the owner to do, but for us to do on our back end to analyze. So, but from there though, we want to get into a rhythm with the owner. What we found successful to keep them at least accountable to what we're teaching is at least a once a week or once every other week meeting with the CFO, because this is not, you need to be focused on driving in that revenue. And then our meetings is how do we keep the most from it and invest it in the things that we need to. So that's kind of how we work on the back end as well.
Okay. Great. Well, that's fantastic. So, the reason I'm asking all these questions is because we might actually be a client. Well, and, we have a team member that we'd like to kind of groom into like a CFO type of.
Yes. We've done that with several people that we're working with on a monthly basis here. And we love when people have those people in the seats and we can try and kind of train them and teach them and here's what we're doing, here's what we're implementing. And so that way you can have someone right there in house too.
Yeah, that's fantastic. So if a question we like to ask quite a bit with people is when you were just starting out in real estate, and knowing everything that you know now and the journey that you've been on, what is one piece of actionable advice that you'd give yourself?
Well, since I'm totally biased to this, I would say set up an account, call it profit, and transfer 1% of every deal into it. I think getting in that habit early on I read a ton of books at the very beginning. I still read a ton, but everyone was saying, pay yourself first, learn the language of money. That's what's Robert Kiyosaki's thing over and over and over again. And what I would do is read like Profit First and be able to set up a system that I didn't have to really worry about the financial area as I grew the real estate portfolio, because I wanted to be profitable from every deal. And I feel like if you are getting the deals and you are actually going out there and producing the revenue, you need some type of system on the back end. So this can be a very simple system to set up. So that way you're not just a leaky bucket of, okay, we just made 20 grand and now we just spent 30 grand, so it's like making sure that I have some type of system right at the beginning. The other reason I beat that drum and why I even say that now personally for myself, that would be the first thing, is I interviewed Pace Morby on my podcast, the Profit First REI podcast. And he said if he would have started Profit First, he's been using it and he's one of our clients and he's been using it now for a while, but he actually said on the podcast live, if I would have had this system when I first started, I'd have $5 million cash more in my bank account right now. So that's where I was like, I wonder if it's more important that I learn a different marketing channel, or if it's like how to make sure that I have the cash in my bank account to not just be a leaky bucket there. So that's why I answer that question whenever I'm asked now, because of that story and because of what now I know, what I could have had now if I would have had this system at the very beginning.
Man, that's powerful stuff.
Yeah, 5 million more in his bank account.
Yep.
Yeah, I believe that. I don't think he's full of it. I mean, from everything that I've been through with business and money, just for sure.
I agree 100%.
Yeah, and like one of the hangups that I personally had on it is like, oh, I don't have enough time for that. And then like we're big fans of Gary Keller, and Gary was talking in front of everyone. And he said the highest dollar producing activity that you can do for your company is to go through expenses and cut anything that's no longer relevant. And I thought about that and I'm like, wait, what? No way, that's not possible. Like my revenue generating activities are from generating more like deals, like getting the next seller to call me or whatever, right? And then I thought about it. I'm like, holy cow, I spend like 3 hours going through my books from the year and I save $5,000 on accounts and stuff that on a tool that I no longer use or whatever, like the dollar per hour on that is insane. And we went through it. And I think so our overhead at one point was $150,000 a month. And we were able to cut back all the way to like 110 a month within like 35 days. And like, yeah, I mean, I can attest to that. The return is absolutely insane.
I love that, because we always say a cut in expenses contributes right to your bottom line, but not always your top line revenue contributes to that bottom line. So if you increase your revenue by 40,000 a month, that's way different than cutting 40,000 in expenses, because the expenses come right to that bottom line. Whereas increasing to 40,000, you might have had to do a new marketing channel that cost you 15. So that doesn't contribute right to the bottom line. So yeah, I'm totally behind that.
So one of the things I kind of like about hearing like what you're talking about too is like, I feel like, David, you have a couple different options for people. Like if you're just starting out, well, he's got this Profit First Real Estate Investing book out. Just take a look at that and then just set up the accounts that it recommends in there. I don't think you necessarily need a fractional CFO, correct? Like
no, not to just set it up. Like, please just go out and do those steps. Yeah.
Yeah. So like he's got some resources for you if you're kind of on the newer side that you can just implement and do.
Yep.
And then as you get more advanced, and then you have some higher level resources too for people that the bus is moving a little bit.
Exactly. That's what Simple CFO is all about.
Yeah. So that's amazing, man. So how do people find you?
So a couple different ways. If you are at that advanced stage, or we like to say people that are making 500,000 and up, like in gross profit a year is usually who we're working with. That's simplecfosolutions.com. If you go there, that's where you can apply for the business, and that's where we can see if we're a good fit. But then also on there, it has a link to the podcast for the Profit First REI podcast. So if you're newer and want to learn more, have a lot of interviews on there, a lot of good information on this. Then we also have at the top of there, it's also the book. So Profit First for Real Estate Investing is one of those tabs too. So you can go right to that tab, or simplecfobook.com gets you to the same place for the book. Then we also have the Profit First REI Facebook group where we upload some tools and people ask questions. And, that's where a lot of people we like to interact in there if you have any questions around Profit First and real estate investing as well. So there's a couple different ways to reach out and connect.
All right on. Well, I appreciate it, man. Thanks for your time. And
Thanks, James. Thanks, Caleb.
Yeah, I think ending these things is always like, okay, like, how do we, Caleb, you wrap us up today, buddy. What do you got?
Thanks a lot, David. This was fun. Mine is a little blown. I know I could never be the one to do this myself. That's why I have Jim and Elise and them, because I'm the guy that goes out and sells stuff. So thanks so much for tuning in, guys. This was very informational, and I hope everybody learned a lot.
All right, guys. So that's a wrap on the episode. Thanks so much for tuning in. I really appreciate it. And I hope you enjoyed it as much as I enjoyed bringing it to you. So if you're looking for some of the additional resources that we have available for you, make sure you check out doorstodeals.com/067. Additionally, we're currently helping to generate about $130,000 a month in passive income through investing in real estate, not only for our agents, but for our agents' clients. If you want more information on how we can work together and collaborate on that, just shoot us over an email, deals@threedoors.com, and we'll set up a meeting and kind of get rolling on that. So once again, that's deals@threedoors.com for more information there. So guys, go out, live your purpose, and above all else, go after your dreams. Till next time. Thanks for tuning into this show. For more episodes and resources that will unlock Doors to Deals, check out our website, doorstodeals.com.